Good evening, everybody. This is Olawale Okibola, Spartacus Trading Corporation, here to bring you the recap for today, December 19th, 2018, the S&P E-mini futures contract. Starting off with the monthly bar, we are one time framing lower, 1, 2, 3 months. Okay. Yesterday I talked about a new auction, a monthly auction to the downside. Nothing changes until we can get back within was this October's range. So right now we're closing, getting ready to close. I don't know what 30, 10, 11 days or so, 12, 11, 12, 11 days away from the end of the year. And it appears that we could close outside of this range. And if we do, we definitely have a new auction to the downside on the monthly bar. Weekly, we're one time framing down, 1 week, 2 weeks, 2 weeks down. Daily, we were one time framing down 1, 2, 3, 4 days in a row. Today we opened, we broke the one time framing trend going down. However, the market began to trade lower, closed lower. So I would consider this the trend still intact going down. Not to mention we were in a 2 day balance. Now we broke out of that balance. So we have a new auction to the downside. Okay, so something I want to bring to your attention. Let's go to the monthly. Oops. All right, here is the monthly bars going all the way back to 2011. All right, so let's just look at 2017, 2018, 2017. Here we are in December. You can see that and here is the year of 2018 right here within the dotted lines. You can see that here we are. Here's a low, here's a close. Okay, so where does that have us? We are trading in last year, September range. So for I would say for this last quarter, we have already taken away the gains from the fourth quarter of 2017. Those gains have now gone away. Doesn't mean we can hold. However, it's something to pay attention to. Also, look for the whole year of 2017. I guess since Trump was elected, the market has been on a monthly basis since 2016. This is November, so that's the election, right? We've been one time framing higher, higher, higher. This is the first pause of some balance, right? Higher, 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 higher. You get the point, right? So in the month of February, we broke that. Then we tried to trade back up, create a new auction to the upside, traded back within, creating some kind of balance. But this month, we have all taken it back. And look how squat these months are. You know, you're talking, what is this? September, August, July, June, May, and then you get this balance here in this area, right? So what am I trying to say? If this market continues with its the same direction down with the kind of volatility we have, we can start to wipe away these months. And then you got these months where the lows are not that far from each other. You think those lows are going to hold? I don't think so. So there could be, not making a prediction, but there could be more selling to come because there would be nothing really holding this market up. Maybe when we get into this balance area right here, which is July and August, because this is the only 2 month balance area I see from 2017, right? Only these 2 months balanced, possibly these 2 months, but you get the picture, right? And so that's what's going on a monthly basis. This is beyond the scope, but beyond the scope of my expertise, let's say, but I am watching and learning. So I am developing the skills on the job as we speak. Also, to give you another perspective, this is the window trader blue using the cumulative profiles with volume. Okay, if there's going to be anything to the upside, we need to get above this volume, this peak right here. Get above there so we can begin to trade up. All right, but see, as you can see right here, we're currently right here near the lows. And this is last year. All these volume profiles are based on the year. So this is 2017. You see that valley? We're in that valley. If the market continues its downward momentum, what's to stop it in this valley? Either we're going to stop and reverse and trade higher because we've passed this peak, or we're going to cut through it and this will be the next peak or the next peak. Possibly the market can get some support here at this peak, and this is volume, right? So what is this? That's that July. This plays into the July, August, those 2 months that I talked about, that there was a balance. That's where we got the peak. So we can very well trade back these 2 months. So there could be more selling, and perhaps the market will find some support in this level. If we break this level, we're taking back half of 2017's gains and continuing to trend lower. Not making a prediction, just something for you to be aware of. This is something more on a higher level, so you gain some scope of what's going on. Now let's get into the profiles. Since we're day traders, most of us, and we got to win on the grind. Talk about this range. This range is approximately 102 points today. That's a lot of handles. So we're going to shorten this profile up some by switching the intervals to 2 to get a better idea of what's happening. And 2 really doesn't do some justice, but it's good enough. Okay, so what do we got? We got 2. Let's go to 3. Better. So what do we got? We got a prominent point of control, 9 wide. However, the market sold off during the Fed Day announcement. We made a high, traded off, created a double distribution. Did not feel that. I will call it a spike because it happened later on in the day today. I'll call it a spike, and we closed, not that far from the lows, I would assume. So what we have is 2 separate days within one. Okay, so if you just look at this day, this lower portion, you got more of a balance going into tomorrow. Tomorrow we're going to play what I call the spike rules, okay? And let's bring some references on. I'll talk about this high volume soon. So the spike rule, well, let's talk about that volume right now. High volume that I'm talking about, this is the highest volume of today that came in. Not a lot of contracts, but it's something to pay attention to if it's the highest volume of today when you're talking about a plus 100 point range, right? So it's something I want to pay attention to. As you can see, once this volume came in M period, M2, the second 15 minutes within the 30 minutes, an N period could not even challenge that volume, right? And then we closed here, closed lower. So going into tomorrow, there's a couple of things I want to pay attention to. One being this volume zone. So that's where I get this zone from, folks. Okay. So we're playing the spike rules, right? So if you open within the spike, that means prices are being accepted at the lower price. Value, if we open up within the spike, will be lower, and you can possibly expect some more downside action, right? If we open above the spike, that means these prices were rejected, and the market more than likely will try to test to the upside. We do have a rally high, so these folks will be feeling some heat if they don't get more continuation to the downside. Right now, they're as happy can be. But we're going to take things one step at a time. First thing we need that needs to happen to get these guys to cover, value has to develop above this spike base. If value begins to develop and stay below this spike base, the trade is still to the downside. One, you have clearly lower value. Two, value is developing below the spike base. The only thing that will negate clearly lower value would be one time framing higher. Or if we chop around and we get a double distribution higher, that holds. That negates value. If we do not get that, one time framing higher and continue the one time frame higher, or a double distribution higher that holds, if we do not get that, more than likely the trade's to the downside. I've already showed you on a long-term perspective, not much holding the market up for the big boys who trade the monthly bars. Okay. Another thing to pay attention to is this zone between 13.5 and 12.75. That volume, that high volume zone, highest volume of today. Why did it come in at the end of today? Right? So you want to pay attention to that. And as I said earlier, in period tried to test that volume that came, the highest volume came within 3 ticks, right? And an in period could not even take it out at all. So it's something you want to pay attention to. Where do we open? If we begin to trade lower, if value begins to build below this high volume, or price cannot even get above and accept it, what does that tell you? With clearly lower value, cranking in the spike rules, that prices are being accepted, more than likely we're going lower. How much lower? I don't know. Will we go lower and come back in? Whatever, I don't know. But it's something to be aware of as you're getting ready to position yourself to take your trades. So going into tomorrow, I would strongly recommend, well, what's the news? We got jobless at 8:30, so that should be out of the way before the open. Tomorrow could be a very tricky day, okay? Just because value's lower, and with the VIX trading at around 22, and just because value's lower, we still got a lot of volatility in the market, and so you can get some back and forth action. You could think the market, the trade is long, and then all of a sudden the market just sails off, or you could think the trade is short, then all of a sudden the market just recovers. What you do want to see though, if it's true selling, that we take out today's low and we stay below there. We don't get a bunch of back and forth in and out of the range. If we do, possibly some folks will cover, and that will take the market higher. But again, the only thing that will negate clearly lower value is one time framing higher or a double distribution that holds, taking us higher. Anything than that, and values lower, values building below the spike base, you probably want to wait for a rally and short that rally and give that trade some time to work. So that's the best advice I can give you going into tomorrow. Just be careful, be very selective of how you place your trades. Make sure you have a appreciation of what's going on in the market in the day time frame, as well as the longer term time frame, as I showed you earlier. And if you need to revisit that, you can always replay this video on the discussion I had regarding the longer term charts. So with that said, this is Olawale Okabola with Spartacus Trading Corporation, wishing you a good day tomorrow.